Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretsky. He's a Vancouver-based realtor online at stevesaretsky.com. He's speaking to us from Vancouver. Steve, the mortgage stress test has been changed. What are the changes?
Yeah, so basically they've kind of removed the Bank of Canada's overnight benchmark rate, which hasn't really changed over the past year despite bond yields coming off and mortgage yields falling as a result. So that Bank of Canada rate stuck at 5.19%. And so what they've done is they basically decided to, effective April 7th, they're going to remove that and they're going to base this new rate off of a group of the median rate of what mortgages are now being issued in the insured space. So that looks like today it's about 2.8%. So basically moving forward is you'll be stress tested at whatever that median average rate is, plus 200 basis points. So effectively what you should see is the mortgage stress test barrier or hurdle be lowered roughly by about 40 basis points.
Was the stress test really needed in an atmosphere where interest rates are going down, not up?
Yeah, so it's not, I think there's a lot of misconception around that. I think that it was essentially brought in to curb household debt. It was designed to slow credit growth and keep a lid on house prices. So that's ultimately what it's designed for. It's actually designed to ensure the stability of the financial system. It's not necessarily designed to, it is in part, but it's not, I don't think the main objective is necessarily looking to say, okay, well, we think rates are going to be higher in, 3, 4, 5 years, so let's stress test this. As we can see in parts of, you can see in some cases where you could probably make a strong argument that rates could be lower in 5 years, given what central banks are doing, what's happening in the global economy.
Are there risks to pegging the mortgage stress test to the mortgage market?
No, I think that it's going to fluctuate. Obviously, it's going to make rates are going to change on basis. It's going to be on a weekly basis, right? So there's going to be maybe a little bit more volatility. It might make pre-approvals a little bit trickier because it's hard to pre-approve if the rate keeps fluctuating.
Was the stress test just put in to give the banks an excuse to lock you into mortgages because if you left that particular institution, you might have to pay more or wouldn't qualify at all?
My understanding of it is that was kind of one of the requirements that the big banks requested in order for them to go along with the stress test, is that was one of the things that they wanted from the regulators. They said, okay, again, this is kind of word on the street, so certainly can't confirm it, but rumor has it is basically they said, okay, we're happy to go along with it as long as we have this term, and that term is basically they want the ability to obviously retain customers, and so that's my understanding of it.
Are there risks to pegging the mortgage stress test to the mortgage market?
No, I don't really think so. Like I said, it's going to make it a little bit more volatile in terms of getting qualifying, pre-approvals, because that rate is going to change on a weekly basis.
We'll have more with Steve Saretsky right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Steve Saretsky. Steve, the banks always like to be on the right side of any deal. How does this updated mortgage stress test benefit the big banks?
I think that obviously, mortgage origination has been a little bit slower. Credit growth has been a little bit slower. It is, has been accelerating recently, but I think that the big banks are trying to pump out more mortgages, get profits up. Obviously, I think they've been struggling a little bit on the revenue side. Particularly in an environment where you have an inverted yield curve and net interest margins are being squeezed. So I think that you have to do is look at the reports. I mean, CIBC is talking about job cuts. I think they're laying off 2,000 people, and in hopes to sort of beef up profitability and get refocused on pumping out more mortgages.
Is this mortgage stress test change having an impact on housing sales for the low end, mid range, and high end?
I think that it's restricted people from maybe buying something more expensive because they can't qualify for it. So you have, a situation where I think you've put a little bit more people that are concentrated at sort of the lower ends. And so I think that's why we're seeing a lot of activity for, one-bedroom, entry-level condos, entry-level single-family houses. It's all really people can qualify. It's all they can afford. And so you're seeing a lot more activity in that space and, starting to see prices go up in that segment of the market.
How important is it for people to take that first step, even if it isn't anywhere near what they want, to just get into real estate?
Yeah, I guess you could say historically it's proved really well. That's certainly what government officials want to do, right? At the end of the day, to sort of keep housing prices elevated, you need more and more entrants into the housing market, right? So the first-time buyer is ultimately critical for the Canadian housing, and from a policy standpoint, that's everything. I think that we have to be careful about extrapolating recent performance of the last 10 to 15 years indefinitely into the future, because things can change. So I think it's important to contextualize that as well.
How powerful is market psychology in real estate?
I think markets are all sentiment based, sentiment and liquidity based. And I think with the changes to the stress test, sure, it's probably going to increase your purchasing power 3%, which is really not a whole lot, but I think more so it's just the headlines and the narrative that's being told around the policy change. And the narrative that's being told is, things are getting easier. Market's already heating up, and now we're going to make the stress test a little bit easier. And so the natural assumption that the market seems to be pricing in is that, this is going to be good for house prices. They should go up. So I think it's, it's just sentiment based. It's all about the narrative.
We'll have more with Steve Saretsky right after the break.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration, with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretsky. Steve, what do you think the Bank of Canada is likely to do with interest rates?
I think that there's a bias for them towards, or a preference anyways, for them to cut rates. The highest policy rate in the developed economy, in developed country in the world. So I think there's certainly, they would love to, but I think at the end of the day, at the same time, they're kind of juggling with high levels of household indebtedness and the risk of, pushing up house prices. That's something that's obviously at the back of their minds. So, I think that they're going to try to hold off for as long as they possibly can. But I think if you look at sort of the underlying data, I mean, the economy is clearly slowing down. So I think that, they're probably on hold for now, if I had to guess. But I think that there's a higher probability, obviously a significantly higher probability that they cut rates, not hike rates.
Will the banks lend more liberally with the change to the mortgage stress test?
I think that credit's flowing pretty good right now. I think it comes down to liquidity, and there's certainly a lot of liquidity still in the housing market. Broadly speaking, if you look at residential mortgage credit growth, it's growing at a pretty fast pace. It's growing faster than it did before the stress test was brought in a couple of years ago. So, there certainly doesn't seem to be a whole lot of inclination that it's, too tough to get a mortgage. I think that, mortgage credit is easily and readily available, particularly in cities like Vancouver and Toronto.
We're hearing of a looming recession in Canada. In the history of Canada, has the price of real estate ever accelerated at the same time the economy is slowing down?
I think you have to probably dive back to the data there, but typically speaking, if people need access to credit and you need jobs to enter the housing market, right? So if those two aren't running fast, then I think that makes it extremely challenging. So, obviously I don't think recessions is bullish for the housing market.
Are we seeing a buyer's market in some products and a seller's market in other products?
Yeah, so you have a seller's market, like at the low end, multiple offers in Vancouver for one-bedroom condos, entry-level single family. It's extremely hot. And then you have the high end of the market, $2 million plus is extremely soft. I would argue the prices are still inching lower in parts of that high end, luxury market. And, I think it's just kind of indicative of the current environment.
How much of a price hike have we seen in low end condos? What was the price, say, a year ago and the price now?
It's hard to base that, right? Because if you look at, the MLS benchmark, it'll tell you that prices are down 1% on a year-over-year basis. But I think what's important is to focus on the rate of change, and you can see that condos at one point were down about 10% on an annual basis, and they've slowly accelerated closer and closer into positive territory. So if you look at what's happened over the last, I would say 4 to 5 months, you've clearly seen prices accelerating. They've been accelerating by about 0.5% roughly a month. So yeah, I don't know, if you extrapolate that into a year, you're looking at, 6%, 10% price growth. So yeah, I think that's kind of what we're seeing in the market right now. It's just tight supply and a lot of demand, and easy access to credit still is popping up that low end of the market.
Steve, thank you so much for being on the show.
Yeah, thanks for having me on, Jim. Appreciate it.
My guest has been Steve Saretsky. He's a Vancouver-based realtor. Online at stevesaretsky.com. If you have any questions for Steve or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.